Till now, we have learned straight line method and written down value method. How to calculate the depreciation according to these two methods. How to do accounting of it. See, there are two methods of calculating depreciation. However, there are many more methods, but they are not in our syllabus. First is straight line method. And second is written down value method. Now these are the method for calculation of depreciation. And these are the methods for recording of depreciation. So these two are different things. Whatever the method we adopt for recording depreciation, that is another thing. What journal entries we are passing, how we are entering the depreciation in account. But ultimately, we will calculate the depreciation only with the help of these two methods. Either straight line method will be there or written down value method will be there. But how to do accounting of depreciation? How to do accounting of depreciation? That is called methods of recording depreciation. So there are two methods again. First method is that we will charge depreciation to asset account. So when we are charging depreciation to asset account, what journal entries we are doing? Let's see. When we are purchasing any asset, the entry will be bank account debit. Sorry, machinery account debit or any asset account debit. Let's suppose machinery account debit. To bank account. Then if we are charging depreciation on the machinery, then what journal entry we will be doing? Depreciation account debit to machinery account. Suppose we have purchased a machinery for rupees 1 lakh. And then we have charged suppose depreciation of 10,000 on this machinery. Then after charging this depreciation, can you tell me what will be the written down value of the machinery? Just tell me what will be the written down value of the machinery now. Yes, very good, very good, very good. Obviously, it will be 90,000. You can check it also here that 1 lakh is debited to machinery account, and then we have credited the machinery account by 10,000. So ultimately now there will be a debit balance of 90,000 in the machinery account. So this 90,000 will become the written down value. Now see the first point, it is saying depreciation is directly debited to the asset account. So this journal entry we are discussing, depreciation is directly debited to the asset account in the first method. Then second point is saying asset account appears in the ledger at a written down value. So you have prepared a lot of ledger accounts. You can see here we have purchased the truck for 4 lakh. Then we have charged a depreciation 20,000, and now the balance in the truck account is 3,80,000. So the second point is saying that the asset account will appear at the written down value. The ledger account will show you the written down value. Asset account appears in the ledger at a written down value. So this is ledger account, you can see, and this is an asset account, truck account, and it is appearing at its written down value now. So first method is clear, that actually we have done already. When we are charging depreciation to the asset account directly, as here you can see it, and also you can see that the written down value will be reflected by the asset account. Is the first method clear? This is the first method of recording depreciation. This depreciation of 20,000 we can calculate with the help of straight line method also. We can calculate with the help of written down value method also. But whatever the method is, the depreciation will be recorded in the asset account itself. This is the point. Yes, please. Just respond and tell me whether first method. Now see the second method. What second method is saying? What is the another method of accounting for depreciation? So in the second method, what we will be doing? By creating provision for depreciation account. So second method of accounting is for depreciation, that we will create a provision for depreciation account. So then what journal entry we will be doing, how we will be doing accounting of it? Depreciation is credited to provision for depreciation account. So the journal entry will be depreciation. See, okay, we will start from the first journal entry, that we are purchasing any machinery. So the first journal entry will be same, machinery account debit to bank account. The first journal entry for purchasing any machinery or any asset will not change. Only the depreciation entries will change. That's why the heading is there, methods of recording depreciation. Now second entry will be what? Second entry will be depreciation account debit to provision for depreciation account. Depreciation account debit to provision for depreciation account. Now suppose again we charge the depreciation 10,000 on this machinery. Now can you tell me the written down value of this machinery account? What it will be? Can you tell me the balance of the machinery account? I am asking the balance of machinery account after these two entries. Let see, suppose it is machinery account. The point is that we have to be logical. We have to see the things properly. It is saying machinery account debit to bank account, machinery account debit to bank account, and the amount is 1 lakh. Now second entry is saying depreciation account debit to provision for depreciation account. Should I write this entry here in machinery account? Can I write this entry in machinery account? Is here machinery account being credited? Can I write this entry in machinery account? Yes, please. How you can write this entry in machinery account? Now this is the problem because we have not practiced the concepts properly in the earlier chapters. That's why we give wrong answers. When no machinery account is there in the journal entry, how you can write this entry in machinery account? Otherwise, what is the difference between these two entries? Here I am doing entry depreciation account debit to machinery account. Here I am doing the entry depreciation account debit to provision for depreciation account. This entry I am writing in machinery account, but this entry I can't write in machinery account. Is this point clear? So there will be no entry in this machinery account on this side. Until and unless you will study account seriously, you will be facing lot of difficulties in understanding the concepts. The base chapters are journal entry and ledger posting. You have to be proficient in these two. Only then you will be able to understand the deeper concepts. Otherwise, the troubling situation will be there. Now we will make a new account, provision for depreciation account. Provision for depreciation account. Until and unless you will be in class 11th and 12th mode, you will not be able to understand the subjects properly. You have to come out of the that 10th class understanding. Don't have any wrong perception in your mind that this is class 10th or 9th. Now our entry is depreciation account debit 10,000 to provision for depreciation account. So here I will be writing the entry by depreciation account, and here I will be writing the depreciation 10,000. So you can see in the previous method what was happening. We were writing the purchase entry as well as the depreciation in the same account, in the machinery account or in the truck account, or you can say in any fixed asset account. Both entries are written in the same account, and that's why what is happening, the balance of that asset account keeps on reducing by each and every depreciation amount. The balance of the asset account will be the written down value of that asset. This is the first method. But in the second method, what will happen? We will be recording purchase in one account and we will be recording the depreciation in another account, that is called provision for depreciation account. Now the difference between the two methods is clear. Both methods are clear. How to do accounting of both methods? Now see practically what will happen on March 31st in this account. Suppose the year is 2015-16. Now suppose this is our year 2014-15. I will make the dates easy for you. Otherwise, this will create a confusion in your mind. So on March 31st, what will happen now? Because we are not writing the depreciation here. So here we have to write the balance by balance carried down, because on the closing date at least you will be calculating the balances. You have to calculate the balances of each and every ledger account. So the total will be 1 lakh and the balance of machinery account will be also 1 lakh. But now understand the two terms differently. One is balance and one is written down value. If I ask you the balance of machinery account, listen the question carefully. What is the balance in machinery account? Can you tell me? What is the balance in machinery account? So the balance in machinery account is 1 lakh. But now if suppose I ask you what is the written down value of machinery? If my question is what is the written down value of machinery, then what will be your answer? Yes, very good. Written down value is book value minus depreciation. And for a new asset, it will be cost minus depreciation. When you deduct the amount of depreciation from the cost of any asset, then you get the written down value. Then you get the written down value. So you can see now that here also in this method, we have calculated the written down value as 90,000. And here also, if I want to ask you the written down value of machinery, the written down value will be 1 lakh minus 10,000, the amount of depreciation charged on that machinery. The written down value will be 90,000. But the balance in machinery account is how much? That is actually 1 lakh. So these are two different terms in this method. Balance will be 1 lakh and provision will be 10,000, but the written down value will be 90,000. So when we deduct the amount of provision for depreciation from the amount of machinery account, then actually we will get the written down value of the asset. This is the point which I want to make you clear, that here written down value will be invisible. Written down value, my statement is correct? Whether my statement is correct that written down value in this second method will be invisible. We have to calculate that written down value. Is this point clear? Okay, now see the first point, what it is saying. It is saying depreciation is credited to provision for depreciation account. That I have told you here, that depreciation is credited to provision for depreciation account. Then second is asset account always appears in the ledger account at its original cost. So original cost of the machinery account was 1 lakh. It will remain only 1 lakh uh, in first year, second year, third year, fourth year. You will never be writing the depreciation here. That's why this account will be maintained at 1 lakh only. So your asset account will show always the original cost. This point is clear. Second point. Then third point is the balance on the credit of provision for depreciation account shows the total amount of depreciation accumulated to date. Now suppose here again what will happen, we will also calculate the balance of this account to balance carried down, and the balance will be 10,000 because the total is also 10,000. Here I am writing the totals. Then what will happen? Again, I will write here the opening balance. By balance brought down 10,000. Now in the second year also, I will charge the depreciation by depreciation account. Suppose straight line method is there 10,000. So now what will be the balance in the after 2 years? To balance carried down. It will become now 20,000. So the provision for depreciation account balance, what it will be? It will show you the total amount of depreciation charged till that date on that particular asset. In the first year we have charged rupees 10,000. The balance is showing that it is 10,000. Then it will get accumulate. Next year the opening balance will be added with the depreciation of that second year. So now 20,000 will be the balance of this account. So 20,000 means that till now, from April 1, 2014 to 31st March 2016, in these 2 years, the total depreciation 20,000 has been charged on this machinery. And now after 2 years, the written down value will become 80,000. Am I clear? Is this point clear now? Third point. The balance on the credit of provision for depreciation account shows the total amount of depreciation accumulated to date. उस पे कितना डेप्रिसिएशन आपने अब तक चार्ज कर लिया है, वो डेप्रिसिएशन यहाँ पे आपको उसके बैलेंस से पता लगता रहता है. Then the fourth point is when the asset is sold or discarded, the total accumulated depreciation for that asset is transferred to the credit side of asset account. This point we will learn on Monday now.